Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, plenty for us to talk about in terms of USDA reports. The big one came out yesterday, hogs and pigs, and we'll get to all that. But to kick things off, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side this week, cash cattle were about $4.50 lower this week. You look at those feeder cattle auctions around the country, we were anywhere from steady to generally $2 higher. On the futures side, the August live cattle futures contract was up 90 cents, and the August feeder cattle futures contract was up about a quarter for the week. On the beef side, the choice box beef price lost another $10 this week. That was really due by and large to weakness in ribs and loins this week. On the hog side of the equation, cash barrel and gilt prices were about $2 lower this week. Also, that July lean hog futures contract closed down a little more than $3 for the week. On the pork side, the pork cutout value was basically unchanged on the week.
All right, Scott, let's talk slaughter numbers, because as we take a look at this week's daily slaughter totals, the expected slaughter for both beef and pork tomorrow is massive. What a recovery.
Yeah. So, and we need that recovery, right? I mean, we've backed up, especially on the hog side, but cattle as well. So we need big runs to come. It's frankly continues to be amazing what we've been able to see the processing industry do in recovery mode from where we were at just a month and a half ago. So USDA is estimating for the week ending June 26 cattle slaughter at 680,000 head. That's 3.7% above where we were a week ago, and actually pushes us for weekly cattle slaughter above year ago levels by 1.5%. On the hog side, with a big run tomorrow, 2.641 million head being estimated by USDA. That's 10.7% above where we were a year ago, week on week. So phenomenal. Yet I want to keep reminding us we're not out of the woods yet. We have a lot of hogs backed up, and we continue to need to make some big runs. But maybe we're slowly starting to talk about reducing what's several hogs that are in backlog.
But it sounds like still, though, we can't have another outbreak or another shutdown, because hog production and pork production specifically is what you like to call and others like to refer to as just in time. In that disruption really causes a massive, it really puts the supply chain off its kilter.
Yeah, and I go, we're not caught up, so as much as I think we're now talking about normal slaughter runs, we still have to go back and catch up what several hogs in particular, that it's going to take us a while. When you're more than 1.5 million head, I'll throw out here, 1.5 million head behind in terms of hog slaughter. Even a 2.641 million head run doesn't solve your problem. You've got several weeks, and probably more accurately months, to talk about, and you add with what's going to be a big fall run already that was going to push capacity, and you just have a situation where we really can't afford a lot more hiccups at this point, or we're going to find ourselves in a situation where we'll be back to more euthanization of maybe even market-ready hogs.
All right, let's get into some of these reports. Speaking of having a very ample supply of hogs that are ready to go to slaughter, cold storage report, it looks like there's some room if we need to fill up some storage.
Yeah, that's correct. You look at where we were for the end of May, and it's not surprising that we've pulled down some of these stocks. I mean, this would be some of maybe near the worst of plant slowdowns, processing plant slowdowns. But when you look at some of the numbers that we got out of the report on the pork side, down nearly 24% relative to where we were in April of 2020, just shows you that we we're pulling down those pork stocks on the beef side, down 13.4%. Even on the chicken side, down 8.4% from where we were the month earlier. So we certainly use stocks as a way to help what was, again, a slowdown in terms of meat slaughter. And it shows in these in these cold storage numbers we got this week. I think, we look out over the next couple of months and we'll build some of these stocks back up pretty quickly as well.
Let's talk livestock slaughter numbers. I think really interestingly, as we get into that report, despite larger inventories, both cattle and hog slaughter numbers are running well behind where they were a year ago.
Yeah, that's right. If you think about it, we expect a pretty large increase in pork production this year. And yet when you look at total slaughter of hogs over the January through May period this year, down about 350,000 head so far. So we've got a lot of catching up to do on the cattle side. We're down about 850,000 head in terms of total cattle slaughter. Again, we would have expected to be pretty close to even. So on the slaughter side, both of those just remind us of processing plant slowdown. Certainly have backed up some of those cattle and hogs. Yet when you look at the weight side, cattle in particular, so for May, we were at 824 pounds for dressed weights on cattle. That was just a mere nearly 30-pound increase over where we were a year ago, I say in jest. So it's amazing how much that's grown. May slaughter weights on hogs were at 219 pounds. That's 4 pounds above where we were a year ago. And just to give us a little perspective, we were early in the year running about 215, 216, and we've really jumped in May. So it gives us some indication of what was going on in terms of hogs backing up as well.
The big report this week is the hogs and pigs report, and really kind of the first glance that we've been able to get as we talk about the COVID-19 impact to processor slowdowns and shutdowns and the disruption to the supply chain. A pretty big number when we look at all hogs and pigs.
A lot of pigs out there, Megan. That's for sure what we got out of the report. Now, I remind us that I would not want to be in USDA's shoes trying to do a hogs and pigs report in the middle of a COVID-19 outbreak. A tough job normally, but you throw the COVID-19 on top of it, and I think it's hard. So could we get adjustments as more data comes in? We sure could. So I'll take this report with a little bit of grain of salt, I guess. But number one, all hogs and pigs came in at 105.2. That's above the upper end of the pre-report estimates that were out there. But both marketing as well as breeding inventories were on the heavy end of the spectrum. I think a lot of us maybe felt like breeding inventory would fall more than it did in this report. So it came in at 98.7. It just reminds me to keep saying that once we start the production side going, it's very hard to slow it down, even with very tough economic times that we're going through. But when I look at market hogs, again, it just reminds us in by weight category of what's going on. Greater than 180 pounds came in at 112.8. The one that's really an outlier was the 120 to 179 category, came in at 111.8. Even 60 to 119 at 103.4 was above the midpoint, as was those less than 60 pounds that came in at 99.8. So we've got a lot of hogs. It just reminds me that we need strong demand.
I think the other number that I was a little shocked to see yesterday was the South Faroese also above where they were a year ago. And the National Pork Board puts on a Hogs and Pigs call shortly after its release. And one of the takeaways I heard yesterday was talking about how we could see relief for a little bit, but it seems like it's going to be short-lived.
It sure looks like it's going to be short-lived. And you're right, that Fairings, March through May Fairings at 101.2, well outside the range of pre-report estimates. A testament to just, again, the supply side. It's difficult to get it to slow down, and we didn't do it this time. I even go on down to say, so let's talk about June through August farrowing intentions, as well as Sep through November intentions. But both those, down roughly 5%. I'm going to be surprised, given the breeding herd cut that we saw, that we'll get actual farrowings down that hard. Somebody reminded me that we don't keep sows for pets. And so if we're going to keep the kind of breeding inventory that we have, I'll be surprised if farrowing numbers come in as low as these intentions suggest right now.
We know there's a heavy supply. We know that demand is going to kind of be the driver behind it, whether we see prices come back or we see them potentially drop even further. When we see conversations, whether it's speculative or misinterpreted, like we did this week, talking about relations with China, for example, how potentially disruptive is that to our market?
Yeah, it's not what we need, so we haven't. So I guess I look at it this way: we got a lot of domestic demand uncertainty, just given how COVID has affected things like income and jobs, et cetera. And so we've always kind of been hinging on what would be a strong export situation. If that were not to happen, and all of a sudden we talk about more of that pork backing up into the domestic markets, all that just doesn't spell anything all that rosy from a price perspective for hogs as we continue to go through 2020. Now, maybe we can get out there in 2021 and see some more positive, but we got a long ways to go to get through the remainder of this year.
Thankfully, at least right now, input costs are fairly supportive to production.
That's right. It's hard to find many bright spots, but that's certainly one. And I assume when we see the acreage report next week, we'll get some pretty strong corn acreage out there. And we don't have this crop made by any stretch, but we've certainly been off to a pretty reasonable start in terms of crop conditions in many parts of the country, at least.
Scott, I think that'll do it for us today as we take a look to next week. You mentioned the acreage report. Any other reports we'll be talking about next Friday, or actually next Thursday, because Friday is a holiday?
Yeah, so we will get a restaurant performance index out next week as well. I'm curious just to see the kind of recovery that might be coming there as well. But those are the two that we'll have to talk about.
All right. Have a great weekend. We'll talk to you again next week.
That sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. For market updates twice daily, check out John Perkins' Market Minutes. And for all the great Brownfield podcasts, visit our website, brownfieldagnews.com/podcast. Have a great weekend. We'll talk to you again next Thursday. I'm Megan Grebner for Brownfield.